Hey guys, look, in this session, we're going to be going through Gunnedah. We're going to go through some of the past performance, supply and demand indicators. We're going to go through a little bit about the economy and the economic industries that drive the market in Gunnedah, and then we'll go through a bit of a case study. Before we get into it, as always, this is only general information. It does not constitute financial, legal, or tax advice. The content is based on current market trends, general property principles, and may not be suitable for anybody's individual circumstances. We strongly recommend that you seek financial advice tailored to your specific goals. And before making any investment decisions, consult with a financial advisor, accountant, legal professional, or even mortgage broker. This is purely specific investment property selection information. So look a little bit about Gunnedah. It's in regional New South Wales, about an hour west of Tamworth or so. Over the last 3 months, property in Gunnedah has gone up between 3 and 6%. And over a 12-month period, we're over 12% in annual growth as a home value index basis. If we have a look at property prices, they've been somewhat turbulent over the last year or two. If we have a look here since 2024, property prices have risen sharply and then been somewhat volatile. And lately there has been a little bit of a sharp rise and a sharp decline at the same time. So somewhat volatile. And we'll go through some of the reasons why I feel that as well. In terms of the overall trend of property, look, if we have a look at the overall trend, property prices were around about $300,000 going back to 2009, 2010. They have risen seemingly meager. You can see a bit of a trend right up into 2023, 2024, where we can see that property prices have risen roughly 30% over a 15-year period, which isn't too much. It's roughly an annual growth rate of 2% per year. There are a couple of peaks and troughs here. You can see there the property prices have somewhat dipped and declined over that period. However, over the large 15-year period, we're looking at roughly 30% growth there. In terms of vacancy rates, similar story. There's a number of peaks and troughs, some large periods of high vacancy rates at around about 4.8% peaks there, 4.8 to 5% peaks. And we can also see that we've got some troughs here at around about the 1.2 to 1.5 mark. At the moment, we're seeing vacancy rates rather sit at around about 1.2%, where they've been for the medium term period of around about 5 years or so, since halfway through 2020. In terms of the number of property listings, we could see a peak of 400 property listings in 2015. That has accumulated over a bit of a period. We're looking at around about a 5-year period. However, by and large, over the last 10 years, property listings have declined up until around about 2023. You can see the trend of property listings coming down there. And now it's been relatively meager in terms of the rate of decline here. You can see that we're sitting at around about 100 property listings, which is the lowest that we've had in some time here in Gunnedah. Weekly rents have risen over the last period. You can see here from about 2022 onwards, there's a bit of a trend. We're looking at around about $5 to $5.50 in terms of weekly rent. Rents were around about $250 in 2009, and then we moved to 2020. They haven't risen by that much, around about $100 per week or so. There are some peaks and troughs here where rents had come up and down. However, by and large, we're looking at roughly $100 per week in rental growth. Nowadays, since 2020, since the beginning of COVID till today, you're seeing at least $150 a week in rent, which is 50% weekly rent growth or more. And then gross rental yields have declined. So as we see property prices rise, and they rise at a faster rate than rents have, rental yields have actually declined as a result. So we're seeing rental yields fall from around about 7 or 8% there down to around about 5%. Now, rental yields have always been around about 5, 6, and moving up to 7 and 8% where we hit that peak. And then we saw in the middle of COVID a rapid decline, most likely as we saw that large spike in property prices and then a trending decline to about a 5% rental yield. Overall, the unemployment rate is super low in Gunnedah. At the moment, the Australian national average is around about 4.1%, 4 to 4.1%. Same for New South Wales. Regional New South Wales is a little bit lower at 3.9%. Gunnedah is ultra low in terms of its unemployment. We're looking at about 1.8, 1.9% in unemployment there. Local jobs have spiked over the last couple of years. We've seen a meager rise in the number of jobs from just under 6,000 to over 6,000. And now we're looking at around about 7,000 jobs overall in Gunnedah Shire. So there's been a relatively large spike in the number of jobs being created in Gunnedah. And you can see that the local jobs have risen by a sharp increase there in 2024. We're looking at almost 15% job rise in Gunnedah as a comparison to the average annual growth of around about 2%. The overall value of building approvals has declined though. We can see in 2022, 2023, we're looking at 75 million being the value of building approvals here. That sharply declined, no doubt, because of the cost to build. And we've seen further declines in the area. We're looking at around about 20 million now in building approvals year on year. As we look at the overall economy here, you can see that mining features as a massive part, 14.1%, followed by agriculture. Now, in my opinion, these are very risky industries because mines come and go, especially having such a large proportion. The mining companies will come and go, especially if mining becomes unfeasible and if the mine also runs out as well. So employment can come and go in the area. Agriculture is another risky industry because of environment issues, whether it be drought, whether it be animal disease, trade talks. Having two risky industries feature as the vast majority of the overall economy, in my opinion, is a risk. And you can see how these two feature as a comparison to regional New South Wales overall. So this is a case study of a property that recently sold. It sold in November 2025 for $628,000. Stamp duty on this is roughly $25,000. A 20% deposit plus stamp duty, you're looking at $149,000. Now, based on a gross rental yield of 5.1%, this property should rent out for about $638 per week. Interest-only payments based on 80%, you're looking at $2,480 per month. So the rent there won't be enough to cover the interest-only repayments alone, let alone take into account property management, council rates of $2,500, water rates of about $1,000, insurance premiums of about $2,500 again, based on policy premiums, few other bits and pieces. And all in all, this property has an annual cash flow deficit of around about $5,500 or $106 per week. So look, thank you everybody for watching this walkthrough. If you do have any questions, please don't hesitate to send them through. You can leave a comment and I'll no doubt answer you. If you would like to discuss how property features in your overall investment portfolio, I'd love to have a chat. Please don't hesitate to reach out. Click the link in the description that will send you to my calendar where you can book in a complimentary 30-minute consultation around how investment property can feature within your portfolio. Thank you again for watching and have a great day.